Hey traders, Raghee here. We're going to take a look at two completely different markets, but a very similar pattern that's happening right now. Now I want to follow up on gold because we had talked about gold on Wednesday and that pattern never happened. What was that pattern? Just to refresh everyone's memory from Wednesday's update, we were looking for a minor low after this sell-off, this blue grab candle here. We're looking for a minor low. So this is that down candle. We were looking for either a slightly lower low or an inside candle. We got neither. In fact, what we got instead was actually another high ranging upper end of historical volatility session. So no minor low. That just sent us lower into what was ultimately the beginning of the oversold range. So there's your Darvis right there. I'm not ruling out that the market could go even lower if we break 1780. But there's a couple of things that I believe are indicating that 1780 could hold and therefore is a good setup. Number one, we've had this level act as support more than once. Darvis to another Darvis to another Darvis. So this has been a significant level. Even though we're able to go lower, this has been a good level. In fact, we've bounced from this area before, most recently. I like the wick that's left behind. This candle left a wick behind, telling me that when we got down to 1780, that market memory was alive and well, and there were limit orders to buy waiting at that level. Okay, so that bodes pretty well for buyers. The other part of it, not quite ideal, but we're at least in the area, closing in on the 20 on the slow stochastic. That's not helping us out, quite frankly, but what is helping us out is we do have a neutral trend and we have neutral momentum, and that bodes well for a pause and possibly a zone to attract some support. Support is the precursor to momentum, and that's what we need now, some momentum. So how does momentum look if that's your preference for entering with what could be a minor low? So we have our higher low right there. We have our lower low, which is today's candle, and then we need a candle on Monday, next week, to be another higher low. In other words, we cannot take out this lower low right there. And we also want to take out the high of Friday's candles. We want to take out the Friday high, right? That would be the completion and the trigger of a minor low. So that high right there is 1803. Even better, that means we take out the major psychological level to the upside for the confirmation of bullish momentum and a reversal off 1780. All right, so that's gold. Now, I said we're going to look at two different markets that are doing something very similar. Because a question that I get a lot of is, well, Rog, okay, this is going to work on GC, but can I do this on gold? Well, absolutely. If GC sets up a buy, then gold, by way of, say, gold calls, would be perfectly fine. I'm not looking at GLD for the setup, but it's also doing something very similar. Neutral momentum, neutral trend, Darvis area support. But I'm not concerned about the structure of gold. I'm going to be looking at GC to set up GLD if I want to go with those calls. Now, another market that's moving in the same way, which is just a reminder that the tools that I share with you all are universal and robust. They work on everything and they work pretty darn well as long as there is liquidity. And ultimately, here's where we have Walmart. Does this have anything to do with gold? Nope, but it's the pattern that I want you to see. Take a look at where we are right now on Walmart. In fact, in some ways, it's kind of better than gold, and let me show you why. Look at how many Darvis are lining up in a very tight zone. Awesome. That's your support. Use the automated support and resistance of the Darvis 2.0. It's going to help out a lot. It's going to increase accuracy and make your analysis more objective. Then we have our slow stochastic down here. 80, 20, upper and lower range, 21K, 3D. You can do this for free right on toss, okay? And then add the K and D signals if you want, all right? But what I'll say is this. Don't wait on the arrows. Don't wait on the signal. Wait for your D and K to get at or below 20. This should then sync up with the support of the Darvis. So price first, indicator second, structure dictates strategy. We have a neutral market. Yes, we have quite a bit of bearish momentum coming down into support, but our choppy market is saying at some point we're going to reach oversold support, and that is where we're sitting. It's a good place to start building a long position. All right. It looks very similar to gold, right? Support, confirmation of a neutral market. And in this case, Walmart also has that slow stochastic setting up. Keep an eye on these types of patterns. You know, if I can say there's a couple troubling things about Walmart, despite its chop, we are below the 200 exponential, which I would prefer us not be if we're looking long. But one thing Walmart does having going for it is XLP is holding its own and tends to be a defensive corner of the market. So there are some things we might like about Walmart in terms of XLP being a strong tide, and Walmart could be a boat that plays catch up to that tide now that it has hit its oversold setup. All right, so whether it be gold or whether it be Walmart, learn this setup. You can use it in almost any market. Choppy environment, support, oversold, that combination, the more boxes you can check, the better off you are. All right, have a great weekend. Smash that like button on the way out. Ask any questions if you need to here at the Simpler Trading YouTube channel. I check them every evening. Have a wonderful weekend. I'll see you on Monday for charts and coffee. Be good to each other. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.